Hello traders and welcome to another video review. Today is Wednesday, December 28th, 2022. Let's find out what's going on just in the middle of the week on the Forex calendar. As you can see here, there isn't many data released that might be really important, but pending home sales from the US scheduled for release at 4 p.m. This kind of data are definitely very important. As you can see, the market participants expect an increase from minus 4.6% to 0.8%, so that might be something interesting. And if this index will beat the expectations, then of course we might see some kind of a movement on the S&P 500 and Dow Jones indices. We got retail sales and unemployment rate data from Russia, and at the end of the day, 10:30, we got data from the US again, API weekly crude oil stock change. So kind of a interesting data for all of you crude oil traders. What data had been released already? Data from Japan. Industrial production from Japan beats the expectations and rises to minus 0.1%, beating the forecast of minus 0.3%. And the previous reading is minus 3.2%. So this is very, very nice data from the Japanese economy as well. So it looks like we should take a look at the crude oil first, because of the data that are coming here, and of course we are very, very excited to see on the technical picture of US dollar related pairs as well. But let's start with the crude oil. Daily time frame chart of the crude oil is showing us that we are still moving lower. Let me just show you a very interesting pattern that occurred here. What I'm talking about is, of course, this doji candlestick pattern at the end of this rally. So let's dig in a little bit deeper what is going on here. The first thing is that the nearest technical resistance, as you can see, is located around here. This is the level of 83.33, and there's one more level that you can consider a technical resistance, which is located here, 82.70. This rally never touched these two levels, never touched the 100 days moving average located at 84.26. So we got this local high 81.17 made after the pin bar candlestick was done as well on the daily time frame chart. Now it looks like we have a confirmation of this candlestick pattern. Please remember that this is the pin bar, or you can say it's a doji. A doji is a form of a pin bar, which is telling you that the preceding trend might be completed. Okay, that's not a signal that it's for 100% certain that the trend has been completed. It's just telling you that maybe this trend had been completed. So what do we have here on the chart? We got this technical support, local technical support, 77.74. We got another technical support somewhere around the level of 73, basically 73 to the point, and of course the swing low, $70.10 per barrel of the crude oil. Local trend line, not a problem. We still have the local trend line located somewhere, let's say around this area here. So this is the blue line this time, and of course what we got else is the ABC pattern that you can see straight on the chart. You got the ABC, there you go, from the low of here 70.10. you got the wave A, you got the wave B, and you got the wave C ending with pin bar, yeah, some sort of the doji. Very strong pattern for the bearish setup. Why? Because what we got is ABC to the upside, so it's not impulsive, so it's only a corrective cycle to the upside. We got doji pattern, candlestick pattern on daily time frame chart below the nearest technical resistance, below the simple moving average 100 periods. So right now the momentum is coming off the level of 54, so it's not that strong. Really, this momentum is not that strong. Really, the level of 50 is around, let's say, here. Okay, so that's the level of a 50, and we are about to test it, right? So when we break below this wave A high, or as you can say 77.74, when we break above this level, then of course we might consider this momentum to go lower, and that means ABC. We have the confirmation that the ABC to the upside, this corrective cycle had been completed and the market is ready to go lower. Very nice setup. Please keep an eye on this setup. It looks like this is the end of the ABC corrective cycle, and the market might continue the larger time frame trend, which is down. So that's the crude oil. Well, if you are talking about the some kind of a different markets, let's take a look at the spot gold market. Any kind of interesting situation here? Well, as you can see, we got, of course, 100 days moving average. Nevertheless, we are trading above this average. Let me just show you something very interesting. Let me just zoom in. Okay, so that's the technical resistance levels. The horizontal line I will put on here is the technical resistance, $1,807 per ounce of gold. Let me just zoom out to see if there is something interesting here. Well, this low looks interesting to me as well. I will mark it. I will mark it with pleasure. There you go. This should be some sort of the technical resistance zone. The next level for bulls, so that means the next technical resistance is around that level, 1,873. That's the next eventual target for bulls. Yeah. So we got this technical resistance. Now you might see, okay, it is violated, so it might be technical support. Stay with me for a moment, so I will tell you something very interesting. This situation here is low volatility whipsaw movement at the end of the trending market. So that means probably because we are not able to move towards the next technical resistance, that this is some sort of, let me put it in black lines, some sort of the ending diagonal. Okay, so that's the first line, and that might be, you see, the second line. It's not that easy to spot it because it's not a textbook example of the ending diagonal. It looks like somewhere like that. Let's say it looks somewhere something like this. So it doesn't actually. There you go. It doesn't actually look like a textbook example. Nevertheless, it looks like a ending diagonal, which means the next movement of the gold should be towards the 100 days moving average. There is a technical support here as well. The technical support comes with this level here, very important, $1,728 per ounce of gold. This is the next target, just above the moving average. This is the next target if gold will break out of this wedge formation. Okay, this is a rising wedge formation. So that's the gold. That was the gold. Crude oil is done. So let's take a look at one interesting market. We were talking about the US dollar related markets, so maybe we should take a look at the US dollar to the Swiss franc. That's the last market we didn't look at for quite some time. What is going on here? Very interesting levels I can spot right on. There you go. 9,194 is the technical support. Of course, we almost hit it. Okay. Nonetheless, if you can see here, that's a very clear bearish dominance situation. When we got this first pin bar, then we tried to test this level, and then the price is being smashed to the downside, bearish engulfing pattern, confirmation, extension to the last swing low, and this last swing low will now act as the technical, of course, resistance. So that's the level of the technical resistance, 9,370. Since then, the market has been closed inside of this zone. It doesn't move that much. It's still below 100 days moving average. It's still below this technical resistance. The intraday technical resistance on the US dollar to the Swiss franc is around this level here, 9,325. Momentum is negative. It stays below the level of 50, clearly stays below this level. So please be prepared for another test of this level here, 9,196. This is the level that's supposed to be tested very soon. So that's the outlook for the US dollar to the Swiss franc. The outlook is negative. As you can see, we are about to test lower levels as the bearish dominance is still valid on the daily time frame chart of the US dollar to the Swiss franc. Thank you very much for watching this analysis. I hope I will see you guys next time. So for now, take care, and of course, bye bye.